Hello and welcome to Into Vietnam Weekend Bulletin. I'm To Anh. In this program, we'll bring you comprehensive news about Vietnam's economy throughout the week, ending February the 26th. Coming up are major stories for the week. Vietnam's CPI in February rose by 1.37%. Vietnam's top 50 largest companies posted 127% growth last year. And our conversation with Mr. Alex Ngian, General Manager of Phillips Lighting Vietnam. We'll first look at figures of the week. Data from the General Statistics Office showed that Vietnam Consumer Price Index or CPI in February is estimated to accelerate by 1.37% from January. February's CPI increase was up by 2.38% from December and 16.44% from the same month last year. 10 out of 11 items in the baskets of goods and services contributed to the CPI calculation this month saw price increases, except for prices of postal and telecommunications services. On the upside, prices of housing and construction materials recorded the biggest increase of roughly 2.5% a month. It was followed by prices of food and foodstuff, which soared over 2%. Meanwhile, price of postal and telecom group was the only to experience declining trend of over 0.1% compared to January. Over the past 5 years, February CPI in 2008 posted the highest rise level with over 3.5%, then followed by 2010, 2012, and 2009. The General Statistics Office said Vietnam's trade balance could be likely to turn into trade deficit with a value of $628 million in the first 2 months of this year. This is the result of January's trade surplus of $167 million and trade deficit estimated at $800 million in February. These first 2 months, Vietnam earned $15.29 billion from exports, but spent more than $15.92 billion on imports. The trade deficit was driven by the rising imports of raw materials and accessories by foreign investors' firms. Specifically, they imported over $8.2 billion in the first 2 months, at 37% on year. However, they still took leading role in export revenue with a total value of $9.6 billion, up 42% against last year. Meanwhile, local firms imported less with a value of $7.9 billion, down 6% compared to last year, but their exports reflected a modest growth rate of 4% with a revenue of $5.6 billion. The value of merger and acquisition deals in consumer goods industry was reported to be the highest among other sectors in 2011 and forecast to continue its high growth this year. Last year, the total value of M&A deals reached over $4 billion, of which consumer goods sector accounted for 25%. Investors said this industry would see more and more M&A deals thanks to fast-growing market, young population, and higher average income, which creates a stable market growth. We now move on to a summary about the local securities market throughout the past week. VN Index closed the week at 423.43 after adding a total of 20.23 points, or 4.99%. VN 30 Index gained 5.88% to end at 477.77. HNX Index wrapped up the week at 67.07 by increasing 5.28 points, equaling 8.55%. Foreign investors net bought a total share value of 309.5 billion dong on both national exchanges. Notably, this block bought a net of 314.5 billion dong on Ho Chi Minh Stock Exchange. Meanwhile, the net sold 5 billion dong worth of shares on the Northern Bourse. Next, let's review major macroeconomics and investment events during the past week.
The list of 500 companies with fastest growth rates in Vietnam, called Fast 500, has recently been published by the Vietnam Report Joint Stock Company. 500 businesses of the country had an average growth rate of 54% last year.
The top 500 businesses posted an average growth rate of 57% in 2007-2010 period and a little bit lower in 2011 at 54%. Meanwhile, the top 50 firms grew at a rate of 127%, while the top 100 grew at 94%. The private sector showed important role in the local economy as they accounted for roughly 72% of the list. State-owned enterprises held only 22%. Fast 500 was conducted for 2 consecutive years, aiming at highlighting if effectively run businesses with a fast growth rate. The capital city of Hanoi and the southern city of Ho Chi Minh still account for more than a half of Fast 500 companies, with 114 from the capital city and 120 from the southern city.
The Asian Development Bank, or ADB, will support Vietnam $500 million for building Hanoi-Lạng Sơn Expressway, a project worth $1.4 billion. With a total length of 158 kilometers, the expressway will go through the northern provinces of Lạng Sơn, Bắc Giang, Bắc Ninh, and the capital city of Hanoi. It is expected that the expressway, on completion, will facilitate transport between Hanoi and northern provinces, help boost Vietnam-China trade exchange, and create favorable conditions for the development of key economic zones in Vietnam's northeast region.
Hanoi and Ho Chi Minh City have put an end to their constant drops in competitive index. The 2011 Provincial Competitive Index, released by the Vietnam Chamber of Commerce and Industry on Thursday, showed that Hanoi had 58.28 points to secure the 36th place from the 43rd, while Ho Chi Minh City rose to the 20th ranking from the 23rd with 61.93 points. At the second place in 2010, Lào Cai has now led the PCI rankings with 73.53 points. Da Nang, after 3 consecutive years on the top, has been outed from the top 3 to the 5th place with 36.98 points.
Electricity of Vietnam, or EVN, said Tuesday that it will sell 5.3% of its stake holdings at AB Bank to HG Bank. The move comes after the state-owned firm announced its plan last year to reduce the stake at AB Bank from current 25% to 20%. EVN said this is also part of its restructuring step to focus on electricity production and distribution. Then it will gradually withdraw from non-core sectors such as banking, real estate, and insurance. Pursuant to the government's socio-economic development and budget balancing plan in 2012, EVN will make efforts to save 1.8 trillion dong from production and business costs.
It is reported that Vietnamese goods will enjoy a tariff reduction of between 3 to 5% on goods exported to Russia. The loosened tariff is thanks to Russia's recognition of Vietnam as a market economy. It is expected that export value of the Southeast Asia country to Russia will rise to $2.5 billion from $1.5 billion last year and to more than $3 billion in the following year. Electronics and seafood have been Vietnam's key export products to Russia so far. The two countries will negotiate a free trade agreement in the coming time.
U.S. Ambassador to Vietnam Mr. David Shea, February the 24th, welcomed a delegation of 25 businesses to Vietnam. The business mission was made possible by the American Chamber of Commerce in Singapore and led by U.S. Ambassador to Singapore Mr. David Adelman. Ambassador Xie said in a statement that U.S. companies will be able to find more opportunities as Vietnam continues to develop. He hoped these companies will be able to get involved in the continuous growth of U.S. economic partnership with Vietnam, which will help create jobs and prosperity for both countries. According to AmCham Singapore's Executive Director Josie Pulipano, the oversubscription of U.S. companies is testament to Vietnam's attractiveness as an investment and business destination.
Accommodation report published by the ECA International revealed that two biggest cities of Vietnam were placed among the most expensive cities in Asia last year in terms of three-room apartment rent cost. In the report, Hanoi was positioned the 13th and Ho Chi Minh City the 12th. Besides, the capital city ranks the 53rd and the southern city ranks the 52nd, with one notch lower in the worst rankings. The report indicated that Tokyo was the most expensive city in Asia, followed by Hong Kong and Singapore. Coming up is some major foreign trade news during the week.
Vietnam's import value in January is reported to drop by 18.7% on year, totaling $6.6 billion. In details, the state-owned sector imported $3.1 billion worth of commodities, down 35.3% on year. The foreign invested sector brought $3.5 billion of goods from abroad, up 5.2% on year. The increase in imports of foreign invested sector indicates the stability in business of firms with foreign capital during the month. Vietnam's imports are expected to rebound in the coming time.
The Ministry of Finance has issued a circular on import tax reductions for petroleum, including gasoline import tax to 0% from February 21st. Under the circular, many different kinds of gasoline will not be levied import tax from the current 4% rate. It is seen as an action from the government to balance market conditions and control inflation no more than 10% this year. Recently, domestic petroleum businesses have incurred a loss of 1,000 to 2,000 dong per liter due to constant increases of gas and oil prices in the world.
The General Statistics Office said Vietnam's trade balance would be likely to turn into trade deficit with a value of $628 million in the first 2 months of this year. This is a result of January's trade surplus of $167 million and trade deficit estimated at $800 million in February. In these first 2 months, Vietnam earned $15.29 billion from exports but spent more than $15.92 billion on imports. The trade deficit was mainly driven by the strong rise in import goods such as computers and accessories, among others.
Despite many difficulties, revenues from garment and textile exports of Vietnam have still stayed positive over the past few years. Although 2012 is forecast to be another tough year economically, garment and textile sector is expected to continue to be the leading earner this year. The Vietnam National Textile and Garment Group, or Vinatex, forecasts that the impressive growth of over 30% in 2011 would likely to be shrunken to around 10% this year. Many big enterprises are facing difficulties in obtaining big orders with millions of products because the number of newly signed contracts have been reduced by 20 to 30%. Mr. Nguyễn Xuân Dương, chairman of Ngian Garment Company's management board, one of Vinatex subsidiaries, said the number of orders the company has signed since the year's beginning dropped significantly. Consequently, the company's export markets are on the verge of being